Hello, Warriors. Everyone ready for the Consumer Pain Index? AJ, Shahab, how are you? Sinatra, Brand's ready. Michael Wiseman, Michael Bergman. And how are you, Ryan? How's it going today?
Hi, mate. Yeah, I'm ready for the Clean Pants Index.
Okay. All right. Let's make sure we all have those. So what a move in the end. Wow. I think Gregor would call that impulsive. So, are we going right to that 38 already? I don't think yet. We'll see. What's your take on what do you do at the end if you're flat? Nothing?
If you're flat, nothing. If you're trying to catch a knife, you want to see a few more candles like you're showing there on something like 4 hourly, where it's not making any fresh lows. If you get that picture building up for a few more sessions, that will give you a bit of confidence to maybe try catching a knife, because it gives you a definitive place. Okay. But it keeps carving through, and what's strange is that it's moving against the data. We saw negative PPI number month on month last night. Year on year, it fell, not a negative, but less hot. Core machinery orders, massive drops in those, nearly 9%. And you'd expect the yen to weaken, but it didn't. The Nikkei got a pounding on the data, and the yen followed that.
Yeah, so the yen is most sensitive to the Nikkei, so I hadn't checked that out yet. Yeah, down 259. That's a 15-minute chart. You can't tell anything from there. So there's a daily. Look at what it held, though.
Yeah.
So, maybe we get a bounce in Nikkei coming up here, maybe back to 33. And maybe we get that bounce in the yen. That's going to be a pretty good sell. Why I think it's going to be a pretty good sell is because of this is just wave one or A, and it's already been 550 pips. Yep. So, if you get after a rally, you get a fib extension of that, that's the money wave. Would be a failing rally from here. So, or wherever it bottoms, there's going to be a bounce. So, that's my take there. We got pretty close. Go ahead, buddy.
I just want to say good morning, and good morning, Ryan, as well, and everybody else. I was also going to mention that if you go back to that Nikkei, it looked like we were building like this flag pattern, and the move lower today, which is not what we're seeing in other equity markets like the U.S. equity markets, but if you connected like the two tops, which it's a slightly diagonal. I can't even speak this morning. Diagonal line, and you clone it, and you replicate it down below. It'd be like a flag pattern, except today we broke that flag pattern. So that's one of the things I think is a little bit of a risk here for the Nikkei bulls, is that it's not. It might still be flagging, but it looks like it's trying to break ranks of that pattern. But
yeah, I'd say under this 50-day moving average, there's a lot of space between the 50 and the 200-day. So, if there is a rally, maybe back to the 9-day or so, just some kind of fib retracement in here. If we don't break down right away, just like the yen, I think it'd be a pretty good sell. So, I mean, we know the correlation now. It's not yields, at least not now. It's Nikkei and yen.
It's a bit on and off, because I think the last day or so, yen has had dollar yen has had that secondary win from yields. That correlation is back on, because yields are continuing to pull back from that 4% level, and that's just another arm in the back, if you like, for dollar yen, whereas last week it was largely ignoring it. We've got under 4%, and bang, as soon as we got under 4%, if you look at something like a hourly chart, you can see 4% mark has slammed in as resistance once again. So bang, straight after we broke 4%, we held it, and it's banging as resistance again.
Yeah.
So we'll be back in that box.
And I have to say, and in the ForexAnalytix chat room, I posted a bunch of daily charts of all the yen pairs. They've all come down significantly to some pretty key levels. And if we have time today on this show, you know, I know we got to talk CPI and expectations today, because today is going to be like a big, you know, this is going to be the market mover probably of the month. I would think, but if we have time, I'll take a look at some of the yen pairs for our viewers today.
Okay, because I noticed that. One other thing, and Steve mentioned this yesterday, was the comparative weakness of commodity currencies. You know, I mean, you've had new recovery highs in euro, and you've had new recovery highs in cable. And Aussie, nope. So, you know, we're pretty far away from recovery highs here.
Yeah.
I think as a sail up around, if we get more dollar weakness, which, you know, I don't know if it's going to continue today, it's pretty oversold, but I take a shot at short Aussie, 67.5, 68, wrong over the this high. So that's what I'm waiting for as far as Aussie is concerned.
Yeah, I sold some yesterday. I actually just covered it up this morning, so I've got things to say about all the dollar pairs. So
all right, we may as well address the elephant in the room. We're about to make new highs.
Yeah,
in the S&Ps. I don't believe we're going to confirm. We haven't done it yet. I think Walsh was saying that we could still go to 4,500 with some good inflation news. But, you know, here's really something to pay attention to in the S&Ps. And we already know the DAX is bouncing back, but the DAX looks like the highs end just like the Nikkei. And we're still the strongest bourse in the world. But we're about to develop into a third drive to a top formation. The divergence is pretty clear unless we just get a blow off the divergence is blown out by closing back over 70. On good news, I'm going to be looking to take a shot at the short side of S&Ps today.
Good news meaning strong inflation data.
Good inflation data.
Yeah, well, good for who?
Well, lower.
Really? So you think if we get lower inflation data and the S&P tries to break out, you want to get in front? You want to,
Yeah.
Okay. All right.
Yeah. I'd like to hear the ice crack.
Yeah. Well, you're going to hear some cries, some consumer price index, consumer price. What is it? What'd you call it? Consumer pain index cries. Yes, that's it.
Yeah.
And Ryan, what did you call clean pants index?
Yeah.
Yeah.
And it's our job.
Is that after you shut your shorts?
Did you not have that in America when you was a kid, and before you went out to play, your mum would always tell you, make sure you got clean pants on in case you get one over? Because
I heard that too.
My mom never said that to me, but that must be a British thing.
No, it's not.
Really?
I heard it. Yeah.
Well, maybe because my mom was Asian, she she assumed
they'd be clean.
Just make sure you stay alive and come home. Yeah, maybe that's it.
Pants over here means underwear, not trousers.
Right.
Oh, got it.
Yeah.
Got it.
Yeah, it'd be too embarrassing to have, if we're going to have brain surgery.
I
always think about that when I'm driving around. When I get in my car, I'm like, do I have clean underwear on? Because just in case. No, just kidding. Never think that.
You probably go commando anyway. So
I do.
Okay.
Yeah.
All right.
Floppy fish it around. Whatever. Sorry.
Everyone wants that thought in their head before CPI. Thank you very much, Dave.
Platinum is waking up, and gold held where it had to yesterday around this 20 level.
Have you seen that inverted head and shoulder pattern in gold? I mean, it's set up perfectly for a week. Yeah, for a week. Yes. If we break, if we have weak data and gold breaks out, I think it's got a lot of upside there. 1970 is. Yeah.
Even the gold shares look like they're, they got hammered, worse than the gold, right? Looks like we, put in some kind of low, and we could get some kind of wave to the upside here too. So metals look okay. I guess the test will be if and when the yen ever tries to recover. I know K-Man doesn't believe in that correlation, but down yen has kind of saved the precious metals, don't you think? In spite of yields, Stel?
Yeah, the yen has definitely helped, but it's been a shorter move now this last few days, and really ahead of this number, I wouldn't, as I said before, I wouldn't make too many conclusions. Having said that, I think that we will probably get a disappointment in CPI. So we are at a kind of minor resistance here, 1935 in gold, and if the data is not strong, if it's not I think if it's not in line or if it's not higher than expected, then I think we're going to break higher, and then the next level becomes 1985. But we obviously wait. Platinum is crazy. I mean, you mentioned it. It's had down 3% days, up 2% days. I don't know what to make of it. It's like gold on drugs. So if you're trading it, good luck.
Oh man, that's
like
a crazy one.
Yeah, the white stuff. So the white stuff acting a little better than
that ain't
yellow.
even Oxycontin, for crying out loud.
So Blake, why don't you take over?
I'll do that. Let's talk a little bit. I want to talk about a few things here as we go into today. But Ryan Stelios, let me get your flavor really quick, because on this, this is our ForexAnalytix chat room. I put in a note from Citi here, and I'll just read it to you. I know it's small for some of you at home. You can't read all this. US CPI is a large event catalyst for the day at 8:30 a.m. Eastern. Easing core CPI expectations means the market may be more reactive to an upside surprise, meaning the longer end of the curve is more sensitive, while net equity positioning means they're asymmetric downside risk. Leverage names keep largest short positions in US dollar and yen. I mean, this, basically saying that we're going to be looking for a potential move. The reaction you're going to get and downside on equities is probably going to be greater because CTAs are positioned that way in the dollar. There are long equities right now. Everybody's still expects disinflationary pressures. So the bigger move would be a upside shock in inflation. But what do you guys think? What did you guys talk about on the Flow Show? And if you guys don't listen to the Flow Show, it's on at what's the time for you guys in the UK?
UK.
10:30.
Yeah, UK time.
Okay, 10:30 a.m. UK time. But what did you and Stelios talk about today? I know K-Man's still out.
Well, I didn't talk about anything because I was at the funeral. But
Brian, you were on your own. So no wonder you're so hoarse. Okay, so what's up?
We talked about the very same thing. That the market is looking for lower numbers, so the big price risk is if numbers come in higher than expected. On the headline number, we're expecting a pretty steep drop, 3.1% from 4%. So there's a lot of room there for a bit of messing around with the numbers. If it comes in, a couple of pips either side, shouldn't be too much, shaking the tree. Though if it comes in 2 pips on the higher side, so closer to 4%, that may have a bigger reaction. But anything under, 3%, 2.9%, I think the market will be pretty okay with that. Obviously, it's the core that counts. So that has the potential for being the bigger mover than the headline. We could get
the month over month, right? I mean, year over year.
No, year over year. Always the year. You don't see the Fed talking about month over month. You're talking about year over year.
Okay.
So for me, I know a lot of people are looking at this month over month because it's implication for annualized this, that, and the other. But I look at the year over year. If we're expecting 5% from 5.3, if it comes in hotter, if it comes in 5.1, 5.2, there's your sticky inflation. There's your Fed remaining hawkish. If it comes in softer, it's going to probably put a bit of Tipex on the second of the 2 expected further rate hikes. So we'll see the market drawing down expectations for that.
Okay. All right. Well, thank you very much for that, heads up. I want to share a few charts with you guys. Here's the dollar yen. Dale is the level we've been, obviously talking about. This is like the do or die level for, the dollar yen. It's the 38%. Yeah, it's the bull bear line. It's the 38% retracement of this entire move. Obviously, we're trading below the 50 DMA right now in the dollar yen. I think now at this stage, especially if we get a strong print, I'm going to sell dollar yen at 141. If we can get there over the next couple of days, like strong data, dollar recovers, off of this wedge support, right? This is wedge support. So if the dollar recovers off that, like I said, on strong data, let's say we get some stronger prints today and maybe tomorrow following PPI, I am going to look to sell rallies into the underside of this trend line. That's the way I'm going to approach it. But it's not just the dollar yen. It's not just a dollar yen story. I want to show you what's happening in some of these other yen pairs. Here's the euro yen. So this is your throw over level, right, Dale? So yeah, here's your previous channel. You guys can all see that in blue. Yeah, I mean, we're at the 38% retracement basically of this last move. And I should probably actually make those lines a little thinner, but that's okay. We're at the 38% retracement, or are actually closing in on the 50% retracement, excuse me. So this is like really key support in the euro yen. Take a look at the pound yen or the guppy. We're at channel support, after hitting the 161% extension. Channel support, really key level here. Aussie yen is coming into here. Let me just show you guys this. You see this level right here. This is the 38% retracement as well. We're basically on it. Breakout point, almost on it. Trend line, almost on it. Triple confluence, 50 DMA, quadruple confluence of support right here. Make or break it for the Aussie yen. Remember, this is after a and I brought this up on the week ahead video several weeks ago, multi-decade trend line rejection, and it slipped till then. Okay, so and just so you all know, I closed out my yen pairs, all of them last night on this move in Asia. I still want to be short. I just, you get this big of a move in a few days. It's like, okay, let's pull it off. It's, I had to book some profits there. Why not? Especially against the catalyst that we have here. Kiwi yen, big drop from, again, multi-decade resistance. Remember a week ahead video, we talked about the 30-year resistance level, rejected it. We're now almost on channel support here. 38% retracement, 50 DMA. Channel support, you can see a lot of support. The reason why I bring all this up is because if you're short the yen, because people are expecting the BOJ potentially to change yield curve control this month. When do they meet this month, Ryan? The 27th?
I think it's right after the FOMC, so I think the end of the month, 28th.
Okay, something like that. Yeah, so in a couple of weeks, right? There's a couple weeks of a window to really play with. Right now, people are trying to get ahead of it, but look, a lot can happen within a couple of weeks. And I think when you get this big of a move without any headlines from the BOJ that they have actually altered yield curve control, then you got to be a little skeptical chasing it lower. That's why I'm like, okay, I'll just take profits here, but I am looking to sell rallies because I am looking to position myself long yen ahead of this month's BOJ, just in case they do alter policy. But this is a really lot of key supports on these big pairs. Canadian yen, big move. We actually broke through channel support, but we're coming into support zone 50 DMA as well. So you can see a lot of those moves have already taken place. Now, one of the other big things that happened overnight, Dale, you brought up the Aussie dollar. Look, this is the previous head and shoulder pattern. This was the neckline. I got short into that, resistance. I already covered up my Aussie short, covered up my Kiwi short at it had a 618 rejection, lower high. We hit the 618 following the RBNZ, leaving rates unchanged. We got a spike into that resistance and reverse. So you have a false breakout here. Again, these are the ones that are going to really play out better today on strong CPI. Because if we get strong CPI, you got a lot of people chasing the Kiwi higher last night in Asia, they got John G'd, and then next thing you know, they're, you know, below the 50 DMA, and you're gonna really crap the bed towards the 200 DMA down here, or in the 4 hour. But you can see a lot of people got caught chasing the market last night. They, you know, they probably weren't looking far enough left to see the 618 retracement and big resistance right there. So a lot of currencies like
points.
these commodity currencies could really play well into a strong, you know, strong print. And that's something that I think we should all be paying attention to. But I just wanted to bring up a lot of those charts. I'm gonna say this, that I think that on strong CPI, that means, let's say that the print comes in closer to 5% core that Ryan was just talking about. CPI month over month comes in at 0.3%, maybe even matches last month at 0.4%. And people go, holy crap, maybe we are going to have some sticky inflation. Maybe the Fed is going to have to, you know, continue to raise rates. If that is the narrative today, following today's CPI, because I don't know what it's going to be like today, but if that is the narrative following today's data, then I think shorting Kiwi, shorting Aussie, shorting, you know, Canadian, looking for dollar CAD back up towards 134. I think those are all the plays. If we get a weaker print, then you have to start looking at the euro, because the euro may be up against pretty, you know, I would say, you know, 110 level. But it's holding up pretty well. The sterling, I mean, I know we're up against resistance. I know we hit, you know, trend line resistance last night. It was very well noted in the analysis last night in Asia, you know, on ForexAnalytix, when we hit it and we got a big reversal, as you can see here. I know all that, but we have to also point out what Dale pointed out earlier when the show first started. You know, some of these currencies like the euro and the cable are at, you know, trend highs. You look at like the dollar Swiss. This thing is at nearly lows that we haven't seen since, well, you have to go back till 2015, right? So there's a lot of room for dollar weakness against some of these non-commodity currencies. And so weak data, you know, if we continue to see disinflationary pressures and people go, wow, stocks are going to go to all-time highs you know, 52-week highs, the dollar could stand a weekend against some of these currencies. So I think the dollar cannot be played universally one way or the other. I think you have to prey on certain currencies in certain positions today. So we're going to find out here in a few moments. But let me ask Ryan, what's your best trades based on either outcome today? Because since it's you know, obviously it's kind of a crapshoot here.
Yeah, I'm still hovering for a moving cable to 130 for a tap.
Okay, so you're looking for a short up here.
Euro pound? Did you get your euro pound bought? I think it got very close to your.
Yeah, I'm in longs, and I got out some at 30 earlier on today.
That looks okay.
That was good. That was from yesterday. Very well done, Ryan. And
yeah,
by the way, Ryan, he updates his trades in the trades room here as well, so you can see his positioning when he's doing everything right here. So
I wish dollar
good job.
is good, but that's looking a bit iffy at the moment. Blake, I know you're in it as well.
What's that?
Dollar Mex.
Yeah, dollar Mex is it's flirting with disaster on strong data, man. The dollar Mex could really, you know, take a toll here. So
yeah.
What else are you thinking, Ryan? Anything else?
No, that's it for the moment. I'm not going to spread myself too thin.
Okay. Stelios, you have any thoughts here? And I don't know if anybody else, whoops, I didn't want to do that. Anybody else here? I didn't want to show my video, but there we go. Go ahead, Stel.
What's ahead of the number? Well, I'm going to react to the number, but I think the thing that's going to move most is probably going to be metals again. So 1935 in gold is key. We are there. If it's weak, I think we should be buying gold and silver wherever they are, wherever they're trading.
At market.
At market, yeah.
At market.
If it's a high number, and by high I mean Maybe not in line. In line, I think it's going to be treated as being soft. So if CPI comes in at 3.1, I think it's probably going to be treated as being dovish. But if it comes in at 3.2, 3.3 or above, then I think metals are going to get hit. My view obviously doesn't change for the medium term, but I think in the short term, I think gold could really test 1895, which is the next support. So I'll be looking at gold and silver for clues. And actually, a few seconds before the number, usually they start moving. So they give you somebody knows something always.
Oh, somebody always knows something, right? Forex traders said, "Hey, forget the CAD. We have the BOC today," and that we do. Bank of Canada actually is expected to raise rates by a quarter percent. So we'll see about what the BOC is in about an hour and a half. So great heads up. What do you want to say, Dale? I mean, what are you thinking?
I still think the dollar is headed under par to get that kind of panic feeling under a big round number.
Ooh, man, that's a big one.
Yeah, but we could rally first.
Okay.
But I agree with you. I've been talking 112 euro for probably a month now, or since that Friday number. So 112 euro, 131, 2 cable, Dixie under par. And I think it happens by the end of the month.
Wow, by the end of the month. So that means that any dip in any strong data, if we see a dip or we see a bounce in the dollar, you want to sell into that strength, huh?
That's right.
Wow, okay. And you said on the S&P, you would look to sell any rally into new highs. So the 4,500 level, just so you guys can all see, this is the 78% retracement, comes up at channel resistance, which is around 4,550, but you would sell a rally into that.
Yeah, I don't. Yeah, and I don't know if it has enough juice to do that. Get that high. So I'm 4,500 is not out of the question though. I don't know.
Okay, and just you were talking about the yen or the Nikkei a little earlier. I just want to show you real quick.
Oh, the flag.
That was like the flag pattern I've been following. I was like, okay, bull flag pattern. Let's see if we get a continuation. It's breaking lower. Obviously, we're at the 50 DMA, but that's going to be influenced by it's going to follow U.S. equities from here. I mean, that's pretty simple. Speaking of which, S&P equal weighted index, we are at triangle resistance, just FYI. This is if the S&P was equally weighted across the board, we are at resistance. So, you talk about like an upside break in stocks, this is another catalyst that could continue to drive prices higher on an upside breakout today. So we are just a couple of minutes away. It looks like we're exactly 2 minutes away. So I'm going to get us prepared. Now, remember, guys, gals, if you are in or want to be in the ForexAnalytix chat room, make sure you check us out here. This is where, we have like our general chat. We've got the S&P chat, the Flowonomics room. I think Five Magics was there several days ago warning us about, BOJ potential YCC change, before the dollar yen dropped about, 3 or 4 big figures. You got the news and research room where we put a lot of data that comes through across our desks. So make sure you check it out there. That's in the ForexAnalytix community. Not only do you get this analysis, but live squawk feed and calendars and patterns in play and all sorts of things. But let's get set up for today. Let's go into, I'm going to put up, we have the S&P right in the middle. Go ahead.
Okay. No, I noticed that's equal weight.
It's the equal weighted one. It's it gave us the rejection a while back. So here's the dollar on the far left. We didn't even talk about yields, which we probably, should, since they are, coming under a little bit of pressure. The bond market's actually holding some pretty good support, but there's the S&P right in the middle. I'm going to actually bring that in a little bit. One of the other things that we have in ForexAnalytix is the data flash. So let me give that. That's going to show you instant reaction to the data, which will be out in approximately 20 seconds. So here comes the CPI data, guys. Heads up, this could be the biggest FX market mover for the year.
In eternity.
Up to this point. This could be, and plus the lack of liquidity.
All right.
That we have. Here we
Let's
go.
see. Don't see it yet.
Drum roll.
Dollar 3.0 core 4.8. So that's weak.
Whoa.
I said 2.9 and 4.9. If you average
Look at
those,
that.
I'm in line.
Wow, dollar's getting smashed. All right. So
Wow.
Dale, here comes your 4,500 in the S&P.
Yeah. Yep.
Here it comes.
All right, let me get to my platform.
What do you do here?
Not here yet.
The disinflationary data is playing through. That's going to keep stocks at all. We are new highs for the year. New highs for the year.
Selling it here with a 25 handle stop, reduce leverage.
Whoa!
Right now,
look at the big
71.5.
Wow, let's take a look at yields of what's happening in yields right now. See, yields are selling off. Dollar yen is absolutely getting smoked right now.
Maybe we're going to get under par today. I thought it was going to take till the end of the month in the Dixie.
Yeah, I mean, hey, look, we're seeing some pretty big moves here. I'm just sitting there thinking, what do I want to do? You notice the cable can't even make it to new highs here, but the commodity currencies are outperforming as you would expect. You got the Aussie right back up towards these highs. Kiwi is right back up towards the highs. I think I'm going to sell a little bit of New Zealand dollar here. Yeah. Yes, I am.
So the core is down.
There's one counter to these numbers. Real average weekly earnings came in stronger on the month, 0.5% versus down 0.1 prior. Year on year came in 0.6 up versus prior down 0.6. Hourly earnings up 1.2% versus 0.2% prior. So on the wages front, a bit like the NFP, that's looking strong. So that might take a bit of wind out of these this USD selling.
Got it. And also
NASDAQ
keep in mind,
barely a new high. NASDAQ 100, barely a new high. I just want to mention something about this NASDAQ rebalancing. They're doing it because of the high concentration of Apple and Microsoft. And why are they doing that? Because if they ever corrected, it would make the index look worse. So they're, if I was holding Apple, I knew they were going to reduce its weighting. That alone could bring some selling pressure into it. So I don't think Apple will make a new high on this new high in the S&Ps here.
All right.
I want to bring up.
All right. Well, we'll see what
NASDAQ
Apple does here. Just want to mention that the dollar yen is at the 161% extension. Obviously, look at this intraday RSI is very oversold here, but we're at some pretty critical support. The dollar just continues to get smoked. We are at right around the wedge support that's coming into play. Dollar weakness was really the theme in Asia, and now it's continuing on. Let's see if we can test these major levels and hit new lows for the year. I don't think the dollar will. Personally, I think it's going to hold down here.
Look at silver.
And actually, I believe the gold market is probably.
So you got your breakout still in the gold.
There it is.
Yep.
Do you have a guest coming in today, Dale?
I had one scheduled. I was invited Raksha Soni to come, but she gets confused with times sometimes. So anyway, she's not here. So that's the bottom line.
Got it. All right. Well, that means we can do a little bit more coverage at this moment. So take a look at the euro dollar coming in towards that not the all-time highs. I keep saying that. It's the 52-week highs here. Some really key resistance in the euro coming into view. Now, look at this weekly chart. I'm going to show you guys something. This is if you take a look at the lows back in 2017, this is a previous trend line. We'd kept an eye on it for many, like the last year or so. This is COVID lows that capped us not only in January of this year, but also in April of this year. we're closing in on that level again around the, you can see right around the 110.50 level. So keep that in mind in the euro as we're making our way up there. Really key resistance around the 110, 111 level. You're starting to see the dollar recover a bit here, I guess it's recovering off the lows a little bit. I don't know what's going to actually turn the dollar, especially with stocks at new highs for the year. But we'll see. Ryan, do you have any closing comments before we let Dale take back over here?
No, I'm keeping an eye on this. That mix is broken. I've stopped myself out my longs. I'm looking maybe to get a short if we get a retest of 1702. Euro dollar, that might be interested into 111. I know Dale's got his 112. I've got a bit of a line at 111. Dollar yen, it's through the my 38.2 fib at 139.17.
We're going for that 38 level, man. It was a magnet.
Going for that 38 level.
Close enough, anyway.
Yeah, that's the one.
I'd call it accomplished. But anyway, yeah, interesting day. So weak dollar, everything's higher when you have a weak dollar. Yield sharply lower too, Blake.
Yeah, yields are definitely coming down. You can see like
nice
on
that.
Here's the 2-year. Yeah, we're breaking lower here. 5-year breaking lower. 10-year. We're coming off big double. No, I said double bottom. It's not. It's a lot of support at the 161% extension. But this is the breakdown point in yields. Yeah. So this is obviously key. Now, what we do from here is going to be really critical, in my opinion, because we made the recovery. If you've been following along for the last week in the ForexAnalytix, we've been looking for a move back to 112 for the last couple of days here. So we're looking for a move back at 112. And so we're there, and so how we react from here in the bond market's going to be pretty key. Look at the euro blasting higher. Yeah. We're at 110.65 right now in the euro. What a big move. Cables back up towards we're closing in on that 130 level. We're at highs of the session. Anything else that what else is breaking out is crude oil. Yeah, crude oil is above $75.
No one talks about it anymore, Blake.
That's because we've been stuck in this $67 to $75 range for so many months now. It's but I know on a breakout here, you're looking at the 200-day moving average. 127% extension of this range comes in around 77.25. So that looks doable.
Easy. I think mid 80s is possible.
Mid 80s. Wow. All right. Yeah. All right, guys. Well, we have conditions will continue to loosen. Financial conditions.
I want to ask Brian if he thinks the PPI will reverse this sentiment at all tomorrow. If he
it'd have to come in really strong for it to do that. Very strong for it to do that. Okay. If anything, the way this CPI has gone, it's likely to be negative. It'll just add a bit more to what we've seen today, perhaps.
Okay, so Doves won the second game of the doubleheaders tomorrow, and we'll see if it's Doves sweeping the doubleheader tomorrow.
We will see, Dale.
The question is what will the Fed do in terms of their reaction to this number? That's the thing. But anyway, let's see.
Yeah.
All right, Stelios, any final thoughts before we let pivots. Any final thoughts?
I wouldn't go against this move that we're seeing today. So
smart.
I made the prediction. I was almost right. Don't want to say I told you so, but it was damn close. So I'm happy about that.
All right. Well,
nice prediction, Nostra Stelios.
Thank you.
All right, Dale, I'm going to pass it back over to you. I want to thank everybody for being here live with us on ForexAnalytix and the F.A.C.E show. And, we'll catch you tomorrow. We'll be here at same bat time, same bat channel, as they used to say.
very good guest tomorrow. She does a lot of stuff with Jim Cramer. So looking forward to seeing her name again. Carly. Yeah, that's right. So we'll be talking to Carly Garner tomorrow. Her stuff is all over the financial media. So we'll see what Carly's thinking. And thank you, team. And appreciate everything that we do to add value for the people that watch us. So you people that watch us, don't just count your pips, count your blessings. See everyone tomorrow for the second half of the play. Good luck today.
Thanks,
Adios.
Coach.
Thanks, Coach.
All right, good luck, everyone. Adios.